Hello, everybody. Just gonna give everyone a minute because people are coming in the room and then we'll get started. Hi, Nate. All right, we'll get started in 1 minute. And we are recording. Hi, Wendy. All right, might as well dive in for everybody that was here on time, and I'm sure more people will jump on the call with us. So you've made it. You've made it to our 4th session of our listing series, and I've seen a lot of you that have been on the call, at least for the last 3 that I've taught. So great job. We are next going to be rolling out a lead generation series. So if you like how we've structured this format, we're going to continue each month with a focus on a series. So obviously this month was our listing series. Next month, we're going to do a lead generation series. The following month, we'll have something else that'll be great and relevant and timely. So stay tuned for that. Today, you don't have to just listen to me ramble on for an hour, which I'm sure you're all relieved because you've listened to me for the last 2 sessions. I have Nate Kanney with me. Nate, do you want to just introduce yourself and tell everybody your role that you play here in the market centers?
Yeah, sure. Hey, everybody. My name's Nate Kanney. Not to be redundant. I'm based out of the Kingston office. I am the managing director of commercial for all 3 of our offices. I mostly really only do commercial. So I don't really do any residential stuff. I've done a little bit of it just to kind of learn a little bit more and have a little more respect for what most of the people in the company do. But I kind of just stick to my bread and butter where I have a little more fun and where I'm in my lane. And when the residential stuff comes up, I kind of just refer it out or get somebody to partner with me if it's somebody important to me and I want to make it a learning experience. But been doing the director role since the end of the summer last year. And yeah, slowly growing it. So pleasure to join everybody today.
Nate is also on our Agent Leadership Council in Kingston. So he's part of our ALC. He is the chair of our education committee. So he works with us to put on these great classes like the listing series that we've been hosting all month. And if you're out there in the world and you're interested in getting it into teaching, training, you have input or ideas about what should be on our education calendar, you can consider joining the education committee, and then we meet monthly and plan out classes for you. So if that's something you're passionate about, that might be something that you volunteer for, and you can reach out to Nate and he can get you set up with the meeting times and all of that.
And even if you're not interested in volunteering for that, I do want to just give everybody a heads up to stay on the lookout for any education promo emails that might include me on it this year. I have a couple guest teachers coming in from out of state this year. We've got a class coming together for May that it's called a brokers estate building class, and it's a 2-day class taught by brokers who built, their real estate empires and portfolios by leveraging the brokerage income they made to develop their own portfolios and reinvest it. It's one of the highest level, kind of counseling and real estate investment classes that people like us can get access to in the country. And we've got the people coming in. So that's just one of them. I got a couple more. And so one of the things I'm passionate about is helping all of our agents turn their, Keller Williams income into portfolio growth. So keep an eye out for stuff. I'm trying to bring some unique, interesting stuff that's not just your typical cold call more, hand out more cards, get more listings. You should still do that, but instead of buying the $120,000 Jaguar, go buy a $500,000 investment property at the end of the year.
Yes.
So anyway, anybody has any questions, I'm always available to talk about that. If you have any suggestions, just let me know. But
awesome.
Yeah.
I love that. So yeah, so we're always looking to diversify and come up with different classes that are relevant and timely with the market and what we're looking to help our agents do. So you were at the 4th session now of our listing series. So we started off, Lee kicked us off at the beginning of the month, sharing all of the ways that her team is lead generating for listings and the sources where they're finding sellers right now. Then I talked about, okay, now you found some sellers. How do you nail a listing appointment and convert a lead to an appointment, and then an appointment to a signed listing agreement, right? And then once you have an active listing, you then have to market the listing. So that's what we talked about last week. How do you market your listings for more listings and for buyer clients? And so if you've missed any of those sessions, you can go onto our YouTube channel where they'll be posted. They'll also be posted. I'll also send out a recording for everyone that was registered, which is all of you, after this session today, where you'll have links to all 4 sessions. So today what we're talking about is, okay, so now you've followed along, you've lead generated, you've gotten the listing, you've marketed it well, and now it's time to negotiate a deal, right? That's the 4th step in your real fiduciary duty that you're promising your seller client when you're taking a listing. So what we're going to talk about today is all about negotiations. And one of the reasons why I think it's great that we have Nate helping us today is because he's coming from the commercial realm standpoint, where it's a little more cut and dry than some of the emotional things that can go on when you're working with a residential seller and you're trying to get them to negotiate. So he's going to give us some really good logical, logistical tactics that we can use with sellers, right? Because they say logic makes them think and then emotions make them act. And I can talk a little bit about, okay, and how do you move people together to find a win-win solution so that everybody's getting to their common goal, which for the seller is obviously selling their house, for the buyer it's buying that particular house. So before we do a deep dive into that, I think we have to start with the top, which is, when do you start the conversation about negotiations, right? And so I think it's important to point out the conversation about what's going on in the market and what might happen if they receive an offer, where that offer might be, needs to start at the appointment, right? That can't start when you already have a purchase offer in your hand and you're looking for the seller to be reasonable and meet in the middle. That should start right at the appointment. Nate, would you agree with that?
Right at the appointment when you first meet with your client?
Yeah.
Yes, I would absolutely agree with that. And I would actually go, I would go in a little bit more detail and say that in every client relationship, our duty is not just to rapidly get through the deal and get to our closing and our commission, but to counsel and educate our client. And by doing that, we're also educating ourselves about the client. And so whether it's a buyer or a seller, having a profile of that client early on in the relationship is important, and developing and building that relationship and understanding their profile more as you build that relationship is really important. And the reason I say that is because we all deal with this very frequently, where we have an irrational seller who wants more money than it's worth, or we have an irrational buyer who just wants us to submit a lowball offer. So in those situations, it's very important to have a great high-level understanding of that client's psychology and their wants and needs and why they're getting there. Because not only can we help ourselves be set up to succeed by understanding them better, if it's a matter of problem solving, we can also bring a unique formula or solution to the problem to get them to the solution that they need.
Right. And so we talked a little bit about on the second session when we were talking about some tricks to when you're on the actual listing presentation. One of the things I said, actually, this was when we were talking about the leads actually on the phone and you're looking to set the appointment, trying to find out as soon as possible somebody's why, right? In residential real estate, most people are moving for some type of personal reason. It's not always just to cash out on the market. A lot of times it's they're downsizing, they're upsizing, they got a new job, they lost their job, they're having a kid, they're getting married, they're getting divorced, right? Like there's something personal going on in their life. And so figuring out that driving motivation is also super important to understand once you get to the negotiation phase of the deal, because you have to know how motivated they are, right? Essentially, you need to know what is going to be their pain points that they're looking to solve by selling their house, that you're going to solve for them by being able to put a deal together. And sometimes you can help people think logically through that. The other thing I know, Nate, we are talking about is figuring out the fight from the financial aspect of the seller, you know, what they're looking to accomplish out of the sale. So how would somebody go about doing that? What does that look like?
That's a great question. In in commercial, I don't know how many commercial brokers actually do this, but I will never work for a buyer client or a seller client or a landlord without doing an in-depth due diligence on that person and their property. And the reason I do that is because I want to understand their financial position before I get too involved. So when I meet with a seller client and I start that, you know, I already want to know how much equity and how much debt they have on the property that they'd like me to sell. And the reason for that is if somebody has a property that they'd like to sell for $1 million, and I've already done my research on that property and that client's portfolio before I go to meet with them, and I recognize that that property, which they would like to sell for $1 million, has $900,000 of debt on it. Now I know that this is a problem property or a problem seller. And so if you know that there's only $100,000 of equity in the deal, of which 50,000 is going to come out in the commission, and then there's going to be other closing costs plus capital gains and cost recovery. Now you know you've got a seller who, in order to successfully sell their property, they're going to have to reach into their pocket and pay to sell the property. By the time they pay the capital gains, the additional closing costs, and the cost recovery on depreciation. So if I know that that seller is trying to sell that for that much just because that's the closest they can come to breaking even, you know, that property might only be worth 850,000, which would put them 50,000 in the negative. Then this becomes a job where you're servicing that client by being really creative and trying to solve their problem, not just sell their property. Or if it's a problem seller who's just irrational, at least we know not to get involved on working on it, because if we think the property is really only worth $850 and they want $1 million, and they have 900 of debt, then we can choose not to take that project because we're not likely to succeed in selling it, because they're not going to accept an offer where they have to dig into their pocket. So that's on the commercial side, but that is absolutely just as applicable to the residential side. And if you're ever selling a house and then, you know, you say, hey, I think this will go for 450, and the seller says, well, let's put it on the market at 499, right? That's always what happens. They always want you to push a little harder. And some agents do a really good job of talking them into listing more conservatively in hopes of getting more buyers and maybe multiple offers and going above ask. But if you don't check how much debt they have on that property, you might never know that they're asking you to sell it for 499 because they have so much debt on it because they bought it too high, that they're trying to sell it high just so they can get out of it without reaching in their pocket. Anyway,
Right.
Sorry to be long-winded, but I know that's what you're getting at.
Yes, 100%. And it's important to note, right, over the past 2 years, prices have been appreciating so fast that it wasn't as much of a concern, because the seller probably does have a ton of equity in their house, right? Their prices are just skyrocketing. Now, as we're looking in a decelerating market, that could change. So if you have somebody that bought their house in mid 2020, 2021, say they bought a short-term rental, an Airbnb is very popular. People came up, they bought short-term rentals. Well, as the market continues to be saturated with short-term rentals in the area, their income might be going down as a whole for the property. And then they decide that they want to sell. They could have overpaid in 2020 or 2021, or paid for the market at that time, which isn't the market now. So that's why we're starting with, we have to start these conversations at the listing appointment. You have to understand, number one, what is the person's motivation for selling? Where are they going, right? That could create an opportunity, maybe a referral opportunity if they're selling and moving somewhere. It might help you help them purchase something if they're staying local. But number two, you want to look at the financials, because most people's homes are their largest investment, right? And so you want to be able to advise them and say, okay, based on what the market's showing, not me personally, the market, based on what the market's showing, this is about what your house is going to be able to bear. If you have an outstanding mortgage for X amount and your closing costs and your fees and all of that are going to be X amount, this is what you're going to look at netted. Now let's talk about from there, what is the strategy to get you to that number, right? So that when we list it, we're making sure you're netting at least that. And that's how you can get more into the pricing conversation with somebody when you're at a listing appointment. So if we want to get you to 500,000, we might need to, or a little over 500,000. If that's what we think your house is worth, well, we have two options. We can list it at maybe 490 or 489, and we'll likely get multiple offers. We could list it at 500 and it might take a couple weeks. And then we can get an offer that we might negotiate back down, or we could list it at 475 and potentially drive it up over 500,000, right? You can only do that if you really understand what's going on in the market, which, by the way, if you don't know what's going on in the market, I highly recommend you take advantage of Rosemary's OP updates, which is 9:30 every Tuesday. She covers a different area. So 1 week it's Rockland, 1 week it's Orange and Sullivan, 1 week it's our 35 counties upstate. Just kidding. She covers Greene and Ulster with us 1 week. And you will be the economist of choice if you go on those meetings once a month. Okay, that's a side plug. All right, so you want to start at the appointment and really get their driving motivation for them. So you do that, you have a great conversation, you list the property at a price that will sell quickly. We're still seeing houses that are listed at an appropriate price selling rather quickly, a lot of times for multiple offers. And so now, and you've had the conversation with the seller. Now, the other thing I would say is important to do at the listing presentation is tell them, and that this works well with working with your clients, just explaining all of the scenarios, not committing to a scenario, but explaining to them. Okay, so one of three things is going to happen when we list your house. Number one, we've nailed the market. And in this market, if we've nailed the market, that means within the first 10 days, we will have offers, likely multiple offers on your house for you to review. And then we're going to call for a highest and best, and we're going to look over the terms of each of them together and make a decision about what is the best way to move forward. The second thing that might happen is that we have our first 10 days on the market and we do not get any offers, but we have a lot of showings. If we have a lot of showings and no offers, the market generally states then that you're about 10% overpriced, give or take 5 to 10% overpriced, because you're piquing people's interest enough to come to the house. But when they get to the house, whatever their perception of your pricing is not matching with what else they're seeing on the market, right? It's not compelling them enough to make an offer. So that's number two that might happen. Number three is we're going to list your house and I'm going to have it on the market for 10 days and we're not going to get any showings. So we're going to get very small amount of showings. If that is the case, we will know that we have totally, that we are probably way over what the market is telling us it can bear for the price of your home. So the first 10 days is going to tell us the story of your house. We're either going to sell it, we're going to get a lot of showings and no offers, or very few offers, or we're going to get no showings or very, very few showings. And based on that, then we need to have a conversation about 10 days out about what our next strategy is if we don't have multiple offers then going into it. So again, this is a negotiation class. You haven't even gotten into the negotiation part yet, but you're prepping the seller to understand what's going to happen. You're future pacing them to understand this is the way that the market goes and this is what's going to happen next. And then we have, so that you're aware. Okay, questions on anything we've gone over so far?
If nobody has any questions, I do want to just kind of review before you go to your listing appointment. do your research on the owner and on the house, not just the house. So know what that debt is, and know what you think that value is going in, so you know how much equity they're working with. If you want to be really thorough and detailed, you can reverse search any other properties that might be owned with the same tax billing address. So if somebody's selling a house and they have very, very little equity, which might make that sale difficult, looking up, they might also own 2 other properties, in one town over, and they might just be land or they might be a commercial, but maybe those are free and clear. In other words, they don't have any debt on them, so they're all equity. So when it comes to counseling that client, going in highly prepared, knowing about the client and the property is really important. So if they do have that debt problem on the house, if it's the only thing they own, it's a big problem. But if they have another property that is free and clear, part of your job might be helping them, borrow against the equity on another property to pay the cost of sale or something like that. But as this all relates to negotiating, by doing all these things, you are also going to ask questions to your clients, such as very straightforward, why are you selling? You always want to know, why are you selling? Once you ask that question to somebody, you learn a lot about the person and the way that they answer. And when you combine that with the research you've already done, you're really completing that profile of the seller, which down the road will help you greatly in the negotiating.
And the other thing I would add to that is timeline, getting somebody's timeline down, right? So that's another important part of the listing appointment, is explaining to somebody, okay, if we nail the market and we have offers within the first 10 days, we're still looking at a 60 to 90-day closing period, because we have to get through inspections and contracts and appraisals and everything, title and municipals and all of the things. If you were to close on this house and have to hand the keys to the buyers 90 days from now, does that work with your timeline? That will help you understand how motivated they are. Because if they're like, I need to get this done in 60 days, or oh my God, 90 days. I don't think I could even pack my house up in 90 days. Like, we were thinking this would take 6 months, or yeah, that'd be nice, or we could take it or leave it, right? You start to understand what type of person and their motivation that you're working with, so that when you get an offer, yeah.
If I say to you, if I'm your seller and you say, why are you selling and how quickly do you need to sell? If I tell you I need this property closed in 60 days, what does that tell you?
Then you're likely going to have to guarantee a cash offer. And because the mortgage process can take longer than that. And we're likely going to want multiple offers on the table so that you can pick the best terms, which in your case might be a shortened or waived inspection period. It could be going straight to contract. There's other things that we can try to negotiate in to speed up the process in order to get you sold in 60 days.
Well, it also lets you add a follow-up question, which is, oh, why do you need to close this in 60 days? Where I might say to you, I'm in financial trouble,
Right.
or I'm in the middle of a divorce and I'm trying to sell it before my wife finds out, or, it could be anything. But
right.
Asking questions and educating yourself is highly valuable. It contributes to knowing the profile, understanding the client. Maybe I respond to you and I say, oh, no timeline. As long as I get my number, I'll wait a year.
Right.
And then that tells you something also.
Right. Yep.
And I would add too, that when you have these discussions with people, human beings by nature are very likely to continue talking if you let them. And so if I ask Rita a question and then she promptly and concisely responds, but I sit and I do not respond to her response, if I let her wait long enough, she's got a threshold where she's just going to keep talking. So when you ask a question like, why are you selling? And they say, oh, well, I'm moving. And then you just wait. Chances are they're going to elaborate on why they're moving and where they're moving and who's moving with them and who's not. And you start to learn a lot. So sometimes when you're asking these questions, you know, being short and concise and allowing the client to do all the talking can be really indicative of a lot of things.
It's also a negotiation tactic, by the way. When
Yes.
you're negotiating with another agent, the more you're talking, you're probably talking yourself out of your client's best interest. Like, just say whatever it is and stop talking. If you have to deliver some terrible inspection report and you're stressed about it because you're like, oh, my buyer wants every request on this list and I can't talk them out of it, so I have to go back and present this. Just present it and stop talking. Just stop talking.
Yeah.
I can't tell you how many negotiations I've gotten to the other side of quicker because I've said it and I've stopped talking and the agent just hems and haws and stutters and putters. And then they come around and I haven't even said anything additional and they're all of a sudden, all right, we'll try to make it work. Yeah, okay, let me get with my client, right? So that's definitely a negotiation tactic. Number one, the person asking the questions generally controls the conversation, right? So like when you're talking about the listing appointment, if you're the person asking the questions, you're generally going to be controlling the conversation. Same thing goes with negotiations. And then number two is being concise, just like Nate's saying your point and then stopping talking. I used to have on my computer a little post-it that would say, "Why are you talking?" Because if you guys haven't noticed, I talk a lot. All right, so we have the pre-listing. So the first person you're really negotiating with is your client almost, right? And not that it's necessarily a negotiation, but it is a meeting of the minds where you're learning about them. Sometimes
I think it is a negotiation of sorts, but the way we should be framing it is it's an interview with the client whom we will have a fiduciary responsibility to do our absolute best for their wants and needs. So it's very, very easy as an agent to just focus on what's it worth, get it in the market, get them top dollar, get to the closing table, get paid. But sometimes it can take a lot of satisfaction in really thinking about what are this client's wants and needs, understanding it and going above and beyond.
Yes.
And for me, that's what makes it really fun in this business, is being able to make it about the client, not about the property. As it relates to everybody in this call and residential, residential, we have a supply and demand issue where there is more buyers than there is sellers and product and inventory. So, you're in a great place by selling houses where you're really well set up to succeed by being educated and knowing how to price the property and knowing how to market it, knowing who that target buyer is, et cetera. But when you add this other layer of counseling to your relationship with your client, it can be a lot more rewarding to do it. And you will likely get far, far, far more referrals and recommendations to new clients from that client.
Yep. One side note that I was going to mention before, just about before doing your due diligence, if you have, it's particularly helpful for investors or people that are looking to purchase foreclosures or distressed properties. One of the benefits of us having an in-house title company is that our title company can do a preliminary title search for you for free for any of our agents on any property. And that will tell you liens and a bankruptcy search for the client. So that's probably the easiest way. You would email Kristen Pilati, who runs our title company, and she can usually turn that report around in like 48 hours for you. So that's really a great resource. That, by the way, again, this is a little bit of an aside, but if you work with investors or you're pitching an investor to be your client, that's a great resource to say, we have an in-house title company at my brokerage. And so I can have reports pulled for you in 24 to 48 hours for any properties you're interested in, so that we can have a real idea of what we're going into when we're looking to negotiate. From a buyer standpoint, that could also be a good tool to use if you're on the buyer side looking to negotiate and figure out what does somebody owe on the property, like what is their bottom line likely going to be, if you can have that report pulled. So again, it's a free resource that you have access to because we have our own title company. Okay, so then the next thing I think is important to talk about is fair dealings when it comes to negotiating with other real estate agents, right? And I think that I'll tell a story. My first offer I ever wrote was on a foreclosure on Washington Avenue. It was listed for $69,000. I was pretty new to real estate. The house had all of the pipes frozen out of it and ripped out of it. It had been winterized. It had been vacant for 17 years. It was filled with mold and asbestos and all of these things. And my background was I had just come from working in a litigation department of a real estate law office. And the litigation department, these attorneys were very tough and everything was a really tough negotiation. And I assumed that was what this should be. And so I went into the negotiation trying to explain to the listing agent why the property needed to be de-winterized for the home inspection, because that's what the contract said. Well, you can't de-winterize a house that has no pipe. Right. So he was like, what are you talking about? I felt silly and stupid and was kind of I was rude because I thought that's how you negotiate. Okay. That's not how you negotiate. This is what I think is important to say. 9 times out of 10, the agent on the other side of the deal is also working to put a deal together, right? 9 times out of 10, they want to help their clients get a fair resolution as well, right? One of the reasons why at Keller Williams, it's win-win or no deal. That's part of our belief system, is because we found when you work towards finding a win-win solution between your clients and the other party, 9 times out of 10, the transaction is going to go much smoother than when everybody gets into their corners and is adversarial from the beginning, right? Because if everyone's adversarial from the beginning, it can make inspections go really bad. It can make the contracts process go terribly. It can make appraisal issues blow up the deal. So the easier you can get onto the same footing with an agent, right, and be kind and respectful and ethical in dealing with them, the better off you are, because you never know when the shoe is going to be on the other foot. So if you have the client that's trying to negotiate the crazy inspection report this time, the next time they might have it, right? And so I have found in the deals that I negotiated and working with agents in the area that there was a couple of deals I won that were in multiple offers, and my client's offer was very similar. And the agent said to her client, I've worked with Rita before. She's easy to work with. She handles things fairly. She is able to resolve problems when they pop up. If we're looking at similar offers and different agents, I know it will be smoother if we go and work with Rita and her clients. And that's happened to me a number of times, not just with agents in our office, agents at other brokerages. So I think it goes without saying that when we're talking about negotiations, it's not everybody getting into a ring and fighting each other, right? It really is, okay, now I understand my client's motivation. I understand what their bottom line is, what their ideal scenario is, what their motivation is, all of that. Now, once we get into a situation where we have an offer or multiple offers, what is the fairest, most ethical way I can act in this situation so that I'm representing my client's best interest and working fairly with, the other people involved in the transaction? Anything you'd want to add to that, Nate? I'm sure it's similar on the commercial side of things.
Yeah, I think that in order to do all the things that you just discussed, you always have to be able to change your seat and change your hat, right? So if you're the buyer's agent, you've got to put yourself in the listing agent's shoes. You got to put your listing agent hat on, and you got to say, what is this listing agent's agenda here? How did they arrive at this value? How reasonable is it? And, what might I be up against? To go a little further on what you were saying too, I always recommend, if it's an agent I haven't worked with before, go out of my way to have some phone calls to build a friendly relationship so that they know that I'm not adversarial.
Mm-hmm.
And just from my personal experience, just being a young person in commercial real estate, and also, with some of the accomplishments I've made, I find that if I don't take the effort to make sure that people don't see me adversarially, some of the older agents who are not as good with technology and finance, you know, they can start off on the wrong foot if I don't go out of my way to make sure that it's the right foot, you know.
Yeah, 100%. Yep. So that's really where you want to start. So one of two things is going to happen when you get an offer. You're either going to get one or you're going to get a bunch, right? Well, the third one is not, is you'll get none. And then you're back negotiating with your client about price reductions and so on and so forth. But one of two things is going to happen. You're either going to get one offer that you have to bring back to your seller. And if that's the case, it's probably not going to be for full asking and full cash and closing in 10 days and all the things that they wanted under the sun, or you're going to get multiple offers. And so when you're talking about negotiating on multiple offers, I mean, my personal opinion is it's still best practice to call for highest and best for everybody. That is the fairest way typically for everybody to get their fair shot, instead of trying to negotiate with one party or the other, or create some strange situation. I would recommend on a negotiation that you recommend to your client, again, it's ultimately their choice, but that you recommend to your client to ask for a highest and best, and then you will review all of the offers with them together. So if you're looking to review multiple offers with them, there's a tool right in Command actually that you can put all of the offers in and all of the terms, and even include notes and the down payment amount and the contingencies and everything. And it will shoot out this really nice 1-page looking side-by-side comparison that then you can schedule a meeting with them and go over. Generally, when I'm going over multiple offers, I start with the worst offer first. Is that what you do, Nate? And I work up.
I have infrequently had multiple offers in the sense that the residential market would be familiar with them. But yeah, normally I have done a few of them, and generally, yeah, I would start with like the weakest one. You know, and you go through it, you know, you talk about where they're coming from, you use it as an opportunity to educate, you know, my seller client about where that buyer is coming from, and then, you know, work up from there.
Right. It builds momentum. So that's how I would formulate the offers. Now, in addition to, highest and best versus best. Oh, that's a good question. So in addition to looking at just the purchase amount, other things that your seller might consider, if there's financing versus cash, what the timeline for closing is, what contingencies might have been added. By the way, this is something that you can use if you believe you have a property that's going into multiple offers and you know something is important to your seller, like they need to close within 60 days. Disclose it when you send out the email calling for highest and best, or best and final, right? And say, in particularly, my client will be placing a potential preference on homes, on offers that can close in 60 days, or that are cash, or that are doing inspections for, and you know, as is inspections only. You can include all of that, then your likelihood to get your clients closer to what they want increases. Now, so you want to review all of the terms with your seller and let them choose whichever one they want to move forward with. And then obviously you would place the rest of the offers. You want to go back to the ones that didn't win and confirm that they'd like to be held in a backup position. Once they're confirmed in a backup position, another negotiation tactic I always use is when I go back to the agent that won the offer, I would say, and just so you know, we have 6 backup offers very close to your clients. Your clients did have favorable terms, but we're also holding 6 offers in backup. That helps them place in their mind, like, don't go into the inspection and be crazy because I'm going to pivot to one of these other offers if you start causing problems, right? That's a good nugget of information that you might be able to share. Now, if you have one offer, so you're working with one offer, it's probably that's really when you do start negotiating. So we already talked about one hack of just being quiet, right? So being quiet and using silence to do some negotiation. Nate, what other negotiation tactics do you have when you're working against just one offer?
So if we put ourselves in the situation where, you know, we can literally or figuratively imagine that we have a seller and a buyer. The sellers might be a couple or an LLC with 3 people, and the buyer might be a couple, an individual, or 4 partners in an LLC, but you literally or figuratively just imagine that we are sitting at a conference table prepared to negotiate the deal. So now we have a conference room with all of the stakeholders. Generally, those are really great opportunities to get a lot done because we are the negotiating professional as the agents. We have all the stakeholders there, but you probably don't have the attorneys, which in my opinion, 95% of attorneys out there, I like to keep out of the deal as long as possible. Unless it's the 5%, you really loop them in and get them involved. But you put those people at the conference table and you understand who are the stakeholders, what are their needs and wants in the deal, and put them in order of priority. So your seller's priority may be to sell within 60 days. That might be priority number 1. Priority number 2 might be to sell for the most amount of money possible. Priority number 3 might be to get the deal done and with seller financing or cash so that we don't have to include a bank and an appraiser in order to confirm we're going to be able to close in 60 days. You have a buyer who, like, we assume it's residential. They might want a seller's concession. This is something I'm not very familiar with, so we can all laugh at that. I had to ask Rita about it this morning. But it might be a seller's concession. It might be they want to move in 30 days before the closing because they're out of a house, and if they have to rent an Airbnb, it's going to cost them another $15K. So understanding the needs and wants and in what order of priority of each stakeholder at the table gives you an opportunity to really change your hat, put yourself in each stakeholder's position, understand their order of priority, and you can effectively arrive at where the negotiation is going to land before you actually do it, just by putting yourself there. I actually have a little image I'm going to show you. Here's a stakeholders chart where you have all the stakeholders on top, you have the issues on the side, and you can put them in and you can change the color for priority, things like that. So it's a really easy thing. You can draw it on a napkin, you can make it on Excel, and you can really take your negotiation to a high level and get ahead of it. So you effectively kind of know where you might land before you start it.
Yeah, I love that. And so that puts in into priority what their priorities are, because again, it may not always be highest price or timeline. It could be something different. And then that gives you something to go back to the buyer's agent and negotiate with to still get them their, their best terms. So yeah, I love that matrix, and making sure that it should go without saying, whoever is a decision maker needs to be in on the decision making process, right? When you're going back and negotiating. Yeah, go ahead.
I had that other document that I was going to review. If you want me to wait, I can wait, but I thought I might throw this in there. Okay. Yeah. If anybody has a pen or paper and is interested in reading more about this, we're going to talk about what's called BATNA. It's the best alternative to a negotiated agreement. It is a term coined by Roger Fisher and William Ury in a 1981 best-selling book called Getting to Yes, Negotiating Without Giving In. I'll write that in the chat so everybody can see it. But it starts by using the process of BATNA to start your negotiation. So after BATNA, one of the things, the phrases, terms that you would be familiar with is a reservation price. A reservation price is effectively the lowest amount of money that the seller is willing to accept. So figuring out what that reservation price is of the seller before you start the negotiation is helpful. Or it's the highest amount of money that a buyer would be willing to pay before they walk away from the deal. And then once you understand the reservation price for both the seller and the buyer, you can also, if you're a buyer's agent, I don't know really how you would apply this as a seller, as a listing agent, but setting the anchor price. So your anchor price is your opening offer. And there's a quote in here about the anchor price that's really interesting. And actually, has statistics on it, apparently. The benefit of making the first offer is that it acts like an anchor. Anchoring is well-documented cognitive bias that describes the human tendency to rely too heavily on the first piece of information offered. The initial piece of information subconsciously biases our expectations. So when we are setting, if we are representing a buyer and we're putting the first offer in, our anchor price is the first offer. If we have not counseled our buyer client and then our buyer client insists on an egregiously low price, that is the anchor offer, but it's probably not going to help in doing it. That's when, you know, $1 million listing and you want to get it for 750. So you offer 500 and hope that you land at 750 or something like that. You know, it's usually just going to make the negotiation more difficult. But if you know that you're willing to pay, you know, let's say it's the 750 and you offer as close as you can to what you're willing to pay. That way, you know, you might have a seller who says, okay, I've got a live one here. I think we can get pretty close. But understanding that.
Yeah, sorry, not to interrupt you.
Yeah, go ahead. I'm going to type that into the chat because
Okay, perfect.
you're the one who's supposed to talk too much, not me. But I'm beating you to it today.
No. So a couple of ways that I would, so say I get a lowball offer, I'm the listing agent, and that's the anchor price is super low. A lot of times, I'm sure we've all been there where the seller just says, I'm not countering anything. Whatever, let them just come back. The script that I've used that has worked in the past, I've said to them, listen, you usually can tell in the first counter how serious someone is. Sometimes people are just testing the market. And so why don't we just come down a little off of the asking price? And depending on the total purchase price of the property, that could be literally like $2,500. It could be $5,000, something small where we're still well above where you want to land ultimately, but it will draw the buyer to make their second offer to us. And so the second offer is usually when you start to see how serious a buyer is, right? Because the buyer's either going to also come back at $2,500, or a lot of times what you see is the buyer jumps up like 20 grand because they realize, okay, at least they're negotiating with me. They're getting into a conversation with me. I wanted to test the market and see what they would do. They're not doing much, so I'm going to come up. So that's a good script to use with your seller. If they're saying, I don't want to counter anything, it's okay. Well, what if we just came down a little bit? Because in general, somebody's first offer obviously isn't their highest offer. And a lot of times we can gauge what their real motivation is if their second offer comes up significantly, right? And so that's a little trick that I used to use too with negotiations. The other thing, I think I lost it. I think I lost it.
I was gonna say too, totally separate, but that same concept and strategy for negotiations is always going to be greatly and vastly different based on whether you are a listing agent and you expect to receive offers, or you're a buyer's agent and you will be proposing the offer. And then if you are a buyer's agent, knowing how many other offers and how much demand there is for the property, and then educating that client on how to submit their best offer. Because there's a big difference between being in a non-competitive market where you are the only buyer for a property and being one of many who are competing to get the same deal.
Right. Yeah. The other thing, when you have a buyer in a multiple offer situation and they're asking you, well, what should I offer? The general script I would use with the buyers is, well, tell me, we have to figure out what is your ceiling, right? And so what you have to think about is, if somebody were to pay over, what amount would someone have to pay that you would say, let them have the property? So if, say it's a $500,000 house and they go into multiple offers, if someone was to pay $575,000 for the house, would you say, let them have it? I'm not paying that. Great. If someone was going to pay $550,000 for the house, and would you still say the same thing? Great, then let them have it. Okay, what about $525,000? If someone's willing to pay $525,000 for the house, would you say, well, then great, let them have it? Well, no. Okay, so now we found your ceiling of $525,000. right? Because if somebody comes in and pays 530, do you still feel like let them have it? That, again, I'm not telling them where to negotiate. I'm just asking them questions and helping them self-discover where they want to go with the negotiations, right? The other thing on the seller side, if you have a low offer, ask, and you're explaining, well, if we just come back down a little bit and then we'll see on their first, their first counter, how far they jump up. If you can change that into a question, so could you see how it would be a benefit to keep this offer in play while we're still showing the house and maybe having other interests? So let's keep the offer in play and see what we can get out of that, right? Or I know you're committed to moving in 60 days. Right now, we have one offer on the table. So I would like to continue to engage with them to get a deal together that works for you to get your primary objective of moving in 60 days accomplished. Is that still your primary objective, to move in 60 days? Right? So asking questions as you get into the negotiation is also helpful to have the conversations with your clients that need to be had around helping them, again, reach a win-win. And there's plenty of negotiation books, and most of them say good negotiation is where everyone feels a little bad, right? Like everyone feels like they won a little and they lost a little. That means that you probably came to a fair deal. Now, in the market that we've been in for the last 2 years, it's been very one-sided. The sellers are feeling like they're getting a great deal. Buyers are feeling like I'm getting a terrible deal, right? And so as the market continues to shift, your conversations will likely also continue to shift as buyers want to start taking back control a little bit of the negotiation power that they've lost over the last 2 years. So you just have to get really clear on some of the scripts that you would use for that. Nate, do you have anything else you wanted to add before we open up for questions?
No, let's do questions.
Does anyone have any questions? We're so succinct.
Does anybody have any personal experiences with a negotiation that were unique that we could talk about?
Is anybody out there? I know Holly is. Holly's learning. Holly wins all of her negotiations. So what does she even need this class for?
I can tell you that in my line of, within my niche and specialty of commercial real estate, which includes kind of creative formulas, creative problem solving, and exchanging, where you're actually taking two different clients and you're potentially trading property. One of the ways that, because everywhere you go in any kind of real estate, we always will have sellers that are just, for whatever reason, we don't have to get into it because we don't have enough time, but we always know that it has something to do with an ego or a personal attachment. They want more money than the property's worth, and they're not willing to hear anything other than that's the amount that it's worth. So there's a very, very creative way that in my niche of the business with creative counseling and exchanging, that there's a way to bridge the gap. So if you have a buyer who really wants, 55 Main Street, and they know that it's only worth $900,000, but the seller insists on having 1.1 million, and now you've got this $200,000 delta that the seller is clearly not going to budge on. How do you bridge that gap? How do you get the deal done, right? And so the buyer needs to have a way of getting into a deal and making an offer where they might be bridging a little bit above their 900, and the seller has a path to cash to achieve the 1.1. So one of the things that we see frequently done is if a buyer just wants to pay that $900,000 and they have a piece of land or another house or something like that, you can offer to make the down payment a piece of equity rather than cash. So if you're doing a 75% LTV loan, now you can do a 25% down payment with a piece of equity, such as a house or a piece of land. But here's the thing, here's how you bridge that $200,000 gap. Now, who's to decide what's the value of the property? It's very, very subjective, right? So if a seller insists on having 1.1, and now you have approximately $225,000 down payment to reach the 25% down on the 75 LTV loan on a $900,000 purchase. Actually, let's reframe this, because now we're actually going to purchase it for 1.1. So now you're going to have a $275,000 down payment. You can take a piece of land that might be worth $150,000, and you can offer it as the down payment at a value of 275. So you have just manufactured an extra $125,000 of value, which now you have an opportunity to say to the seller, I'm going to give you this piece of land at this value. You're going to receive the 825 of cash funds at the closing from the bank. And then when you go sell you're going to receive 925, 825. Then when you go sell that piece of land for 275, you'll have achieved your 1.1, right? Now, if the seller just doesn't want to, a lot of times sellers just don't want to do that. But if it's just a matter of getting 1.1, sometimes they're not a matter of getting 1.1 today. They just want to get 1.1 eventually. So is there a way for them to justify that piece of land would actually be worth 275 a year from now or 2 years from now? Sometimes there is. So that's a really interesting way to, understand the client, understand the needs, and get creative. Happy to chat with anybody more about that stuff offline. Maybe it's kind of boring, but it's kind of funny, geeky for me.
No, it's thinking outside of the box, right? It's not your regular cookie cutter where you're either going to get to the price or not. It's looking at the whole picture of that person, of that seller, all of their investments, what their real motivation is, and trying to help them get to their end goal. And sometimes that does involve some creativity and some working with the other side to put together a win-win deal that works for them. I see Leon in the chat, but I listed a house lower than the seller wants, and I'm getting asking price offer. How can I bring up higher offers? So the thing you have to understand is it's a marketplace, right? And so even though you listed the house lower than what the seller might want, the market is probably telling you that you listed the house at the market value, if that's what you're getting as offers, and you're not getting multiple offers. And so again, I think it goes back to at the initial listing presentation, having the conversation of one of three things is going to happen when we list your house. We're either going to get multiple offers, and that means that we priced it appropriately for the market, because in the market there's still a higher demand for buyers than inventory available. And then we'll likely end up selling at very favorable terms, potentially over asking price. The second thing that's going to happen is you're going to have in your first 10 days a lot of showings and no offers. That means that the house is priced reasonably, but probably 5 to 10% above what the market is actually saying it's worth. So it's piquing people's interest to get them to schedule the showing. But when they get to the house, they are deciding that the market doesn't match the condition of your house. The third thing that could happen is that we're going to get one offer, is that we're going to get no offers and very small amount of showings in the first 10 days on the market. That is going to tell us that when people are seeing your house online, which is where most homes make their first impression, they are comparing the price to other homes in the area and the condition, and they aren't even compelled enough to come and see it to schedule a showing. That means that we are likely 15% or more above what the market price is going to bear. So if you start with that conversation, or you can go back now as you have an offer, when you go back, because now if they're saying, well, we listed low, in our terms low, so that we can get the price and get multiple offers, what you want to do is never say me or I. It's what the market can bear. So Mr. and Mrs. Seller, what we're seeing right now is that the market is telling us that a starting offer for this house is X amount of money. That's what a buyer is perceiving that it's worth. And then you have to try to get them to negotiate off of that. And again, that could look like just giving them options. So you still have options. Number one, we can counter them. Or number two, we can keep marketing the home, although it's very rare that after the first 10 days on the market, houses are going to go into multiple offers and sell way over what the asking price is. And so I think when you get yourself into a situation like this where the sellers may be disappointed with the offer on the table, it's really helping them understand that this is the way, that this is a marketplace and that you don't set the price, because if you set the price, all of your listings would be $3 million and they get full asking price, and all your buyers would get the exact dream home for the exact price that they wanted. You don't have control over the market in that way, right? And so the more that you can help people understand that they're participating in a market, supply and demand focus. And so if they really need to sell, then they need to look at what is the market bearing right now. And what the market's bearing right now is whatever offer they have on the table. And again, that might be a logical way to help them think through the process. All right, any final questions? I know we're a minute over. Questions, comments, thoughts, feedback, anything else you want to add? Final closing notes, Nate?
No, I think you really kind of covered everything. I'm glad we didn't have to talk about all the residential stuff that I don't know.
We didn't even have to talk about sellers concessions.
Yeah.
All right, everyone. So congratulations on for those of you that have been here for all 4 sessions of our listing series. I hope you enjoyed it. The recording for this class will go out a little later today or by tomorrow at the latest with all 4 sessions of the listing series. You can catch any that you missed. If you have any other questions, feel free to reach out to me or Nate. We're always here to help, and stay tuned for our February series, which is all about lead generation. All right. Thanks, everybody. Have a great day. Go
Thanks,
negotiate
everyone.
some good deals for your clients. Bye.